You can start it. You can start natural gas whenever you're ready. Let me close out the video. Let's look at the video real quick because I want to look at the video as the breakout, okay? As the breakout. So watch this trade. Let me just get the YouTube stream started, folks, if you can bear with me. There's too much going on. We're streaming natural gas. All right, so welcome everybody on YouTube who's watching. Thank you for watching. And don't forget, you can lose money trading futures, so please trade carefully on your natural gas trades. Here is the ISM services. And I'm just watching the breakout. It would have been a bracket of 8 at least. I would have used a bracket of 8, okay? My order would not have shown on the chart until 59. Right about here, our orders would have shown on the chart. So the price was 30, okay? That's where gold was. It was approximately 30. And then it just shoots down in one direction. The question is slippage, but then it keeps going, okay? Keeps going. There's pretty much no doubt in my mind that you'd easily hit target 1 on a breakout on that trade. You'd easily hit target 1. Okay, and then naturally your trap trade was beautiful also. Trap trade, look, you got your tiers filled and then a beautiful reversal. And that's, I think this is, it's probably better. You got to go back and test 4 now, right? You go back and test 4 reports with the trap, compare it to the breakout, and you make a decision which one you like better. Seems to me that this now is becoming a report that has great potential for trading now. A report that was dead in the water after looking at previous videos looks like, certainly as a breakout, without hesitation, we could say that it looks like it's working again as a breakout. So very, very interesting. That's what your testing shows you. That's what you're hoping your testing will show you. Okay. I mean, I wish there was a way to make this simple. Sometimes it's not simple. Sometimes it's tricky because you got to do the testing. There's no way around it. Here's the deal. I'll be back in 3 minutes. Okay? Not even 3 minutes. Thanks. I know you can hear. Okay. Nothing like a hot coffee and moderating a trade room, right? Nothing like a hot coffee. All right. So hopefully you learned something about ISM services, right? Let's see, did my webcam get fixed? First, we're going to go to natural gas now. That's why we're here. So I want to welcome everybody to the natural gas trade room. Natural gas is a family money trade. I believe it's the most risky family money trade that we trade. And it's because of the potential volatility in natural gas. But it has been trading nicely for the past year. So welcome to the Natural Gas Storage Report. My name is Lee Goldstein, the trading director for 10-minute trades. Please remember, you can lose money trading futures, so trade carefully, trade smart. And natural gas, we'll set up our news. And we'll stay here for crude. Get our charts set. And actually, I'm going to reboot my platform. Let me put my natural gas. We'll check volumes this morning. And we'll reset everything to 0 just because I'm a lunatic. And natural gas is a money trade. So when we reboot, it'll come up in our normal account. Okay. So I want to welcome our YouTube friends. Give our stream a like if you'd be kind enough, and subscribe to the channel. And let's look at a couple of natural gas reports. Last week, natural gas was pretty tricky. I definitely remember the way it behaved. Let's look at the daily market report. Now, there is no 7-year note auction today. I don't know where that came from. It was left on the end of the DMM by accident. That was last week. So, I mean, natural gas says it was a large spike, but that's not actually what happened. It eventually was a large spike. But if you remember, I don't know if you remember what happened in the room, but I do. I struggled just to make 5 ticks per contract because it didn't spike instantaneously. Let's take a look. I'll show you what I mean. When it doesn't spike instantaneously, natural gas can be tricky to trade. So this was May 27th. And I said I was going to check volume. So let's check. I'll show you how to check volume. See, it had a nice spike, but there was a lot of slippage. Because look, we didn't get filled until the bottom of the candle. And we were very lucky we made money on that trade. When you get filled at the bottom of the candle due to slippage and it still keeps going, that's a little bit of market luck, to be honest. Just going through our experience with trading natural gas, that's a little bit of luck. So I was happy to take 2 contracts at 5 ticks each because of where I got filled. I got filled at the bottom of the candle, the initial move. Okay. That's where I got filled initially. Look at all that. Watch this move. It was a lot of candle before I got filled. I didn't get filled till all the way down. Okay. Now look, my charts are spread apart also, so you have to keep that's an element also. But there was slippage, some slippage last week, and fortunately continuation, which helped me to make money. Now, natural gas has 3 winners in a row. It's been having patterns of 3 and a stop, 3 and a stop sometimes. And that pattern can change in a moment's notice also. It could all of a sudden go to 5 in a row and a stop, 5 and a stop. That you never know. So that was 527. Let's look for 520. Here's natural gas on 520. Very, very fast, big move again. Now you got natural gas is an instrument that if you understand what it is, you'll understand that there is slippage, but you often get very large moves. We were up $165 before the trade. When the trade was over, we made 150. We hit both our targets. And even though there was slippage, it was a very nice sized move. And that's what I say to people very often. They go, I can't trade news events. There's slippage all the time. You can't win. But it's not true. What often happens, and you see it, is that, yes, you'll have slippage, but it'll keep going. The move will keep going, and you'll hit your targets even with the slippage. So it's not necessarily true that slippage will always hurt you. Sometimes it's just something that's there, like the air. It's like, okay, there's slippage, but the move's still going. So it's going to hit my targets. Might hit one target and give you an opportunity to get out. Let's look at the stop on 5-6. That was a losing trade. May 6th. Natural gas. Report comes out, and you've got a decent offset, but doesn't really work. And it's partly because even though it was a good offset, you still had 60 billion in storage. It's a lot of gas. So even though theoretically it looked like the news should have forced the gas price up, it did actually move up initially, but I think when the market digested the real numbers, it saw that there was still a fairly large build, even though the build was less than what was expected. So that's why sometimes news analysis can be a little tricky in analyzing why an index might have moved the way that it did. Okay. This particular case, the build was the drawdown was not as expected. It was less, but it was still a pretty big build. And I think ultimately that drove the price to the downside. So that was part of the reason we got stopped. The initial move was up as if there were a drawdown, and it didn't follow through because in reality it was a big build ultimately. So I hope that makes sense. Sometimes it can sound a little confusing, but it really isn't. There was just, very simply stated, there was more gas around. There was a lot of gas around that created a move down. All right, I said I was going to check the volume, so let's do that. Check the volume. I go to my market analyzer, load my template. I have a volume template. I load it in, daily volume it's called. And then I load the future, the natural gas. I'm looking at 7, the volume, and then I'm looking at 8 also. Whoops. Add instrument, future, natural gas 8. Hopefully I've entered it as one of my instruments. There it is. And you can see that the volume is higher on 7. We're not, and the rollover is not for 21 days. So the question is risk. Do you want to risk $300 on a natural gas trade today? Or do you want to risk roughly 150? That's what you're always deciding on natural gas. And, if you're going to trade 4 contracts, then you're talking about $600 in risk, right? Because we do take this as a family money trade. So the question is, do you want to trade it targets of 5, targets of 10? That's the normal way we trade it. The bracket is 5, bracket of 5. I use a target of 5 and a target of 10. You could do 5, 8, and 12 if you were going to trade 3 contracts. That's a lot of risk. $450, right? It's a lot of risk. I'll risk 2 contracts. And even that, honestly, $300 on natural gas. Natural gas, like I said, it's the trade out of all our trades that makes me the most nervous. It's the most nerve-wracking trade that we have. Our entry time is 10:29:59. 10:29:59 activation time. It's a 10-second cancel. Unlike oil, which has been getting canceled lately, natural gas has not been getting canceled. So I'm using a stop of 15, a bracket of 5, target of 5, a target of 10. Stop of 15, entry time of 10:29:59. 10:29:59. Trading for real. recording it. There's the setup. We'll check our time in a minute. Put the chart on live. So we're up 230 from ADP. We could give it all back on natural gas. It's possible. Things happen. Of course, you don't want to give anything back. You know, if you have some people trade with a daily limit. If they make $200, they stop trading. Everybody's different, and the way that everybody trades is different. Generally, you know, I'm looking at a trade that's been performing well, so I have to trade it. I can't let fear talk me out of the trade. I mean, I can, but I don't want to. I don't want to. We can look at, I think we have time to look at one more. So the last one we looked at. We got stopped on 5.6. Let's look at 4.29 if I can find it quickly. Well, here's 4.15, the week before. April 15th was a quick jolt up. It was a one contract. And then let's double check our time one more time. We check our time by going to the website, time.is, and I'm in sync. So they're expecting a pretty big build, 95 billion. Does that match? Yes, it matches with financial juice. That's a lot of gas. They're expecting a very big build. Okay. It's a lot of gas around. A lot of gas that could cause the price to drop. And then we'll stick around for oil. All right. We'll stick around for the oil trade. Or the oil report. Will there be a trade on oil? Oil's been tricky. Oil has been tricky. 2 cancellations in the past month and a half, or last month, I believe. Very, very unusual. So I do want to thank everybody for coming and visiting with us. A lot of folks are visiting today. Maybe have never seen us before. But it's funny, a lot of people do not get up for those early trades. Like the ADP was a good trade this morning, but it's early. So California folks, they would have to get up at 4:45, right? It's 4:45 my time. It's 4:45 in California. And Mark is always here, and he's in California. Mike, it's too early for you. Too early for you. It's hard. It's hard to get up at 5 o'clock in the morning and trade. But I will say, honestly, that our method is the best method to get up early. You don't even have to get dressed. You could leave your pajamas on, turn on your computer 5 minutes before, If it's a trade you're comfortable with and you know, right? You don't have to do a whole heck of a lot. So gas is it's chunking around a little bit, right? It's a little bit choppy before the trade, before the report. Not unusual in the behavior. So we've got a minute to go. And like I said, they're expecting a large build. Look at the build last week. I remember saying to everyone, oh, there's no way they're going to hit the forecast on the build that we were expecting last week. It was huge. 100 billion is a lot. It's measured, I believe, 100 billion cubic feet of natural gas is the way that they calculate it. What's in storage or what isn't. That's a lot of gas. So I tried to close and couldn't get out. I could not get out. So that was a very, very bad trade. I tried to close it, and that's the one thing about natural gas that can really, really get you. It can really get you. So it jolted down, didn't hit the target, and reversed and took us out for a painful, painful trade. Which is I was a little bit worried about natural gas today. Three in a row, three in a row is always worrisome, always worrisome. So it went down and then went up in the wrong direction, unfortunately, and it's a fact of life. It's the first one in a while that's been stopped. And yes, it's painful, but it's just part and parcel of what sometimes happens. I tried to get out and I couldn't get out fast enough. That's really the truth. Could not get out fast enough. Bear with me for 1 second. And it will happen. I said natural gas is the riskiest of all of the potential all the potential family trades. It's definitely the riskiest. Let's get set up for oil. Going to reset my account. Restart the platform. Now, oil is not a family trade. Let's look at the charts. Look at the daily report on crude. second. Okay, so there's a lot of elements that make up the oil report. And oil is at an unusual time today, 11 o'clock. Very unusual time for a trade. For an oil trade. 95% of the time, oil's at 10:30 on a Wednesday. Now, this particular trade does not go in our normal account. So we got to change our connections. Let's look at the DMM on oil. So here's the problem with oil. It's really been quite unusual. Cancel last week, the week before, a very good winner. The week before, a good solid winner. Cancel 512. Cancel 55. Let's look at 428 because the analysis has an asterisk, which means can't tell without a live trade. Let's see if we traded it live that week. Venkat, we do not, because we recommend using, ultimately, we really recommend, you know what, Venkat? I take that back. I do have a video. Send me an email, help@10minutetrades.com. Help@10minutetrades.com, the number 10. We do have a video, how to place orders without using our software, okay? And that would relate very directly to how to place orders on a different platform. Help@10minutetrades.com. I'll find that video. It's up on our website, actually. You can make a free account for yourself on our website, 10minutetrades.com, and you could go through our videos. But if you send me that email, I'll find that video for you. So crude, really fascinating that you've had 3 out of 6 cancellations. I mean, it's just really strange. I'm tempted to take a shot with one contract for 10 ticks because all it's really due to just have some normal responses to the report. It's due to have some normal responses. Let's look at a couple of videos on oil. Let's take a look at I don't think there's any issue with rollover. It's probably at least 10 days, maybe more. But if you're unsure, see, there is a broker. AMP will not let you trade. If AMP is your broker and they're your clearing broker, they won't let you trade oil 5 days prior to rollover. Now, we're not 5 days me load the right template. And you got 14 days to roll over, so no problem. You'll see if I try to load CL8, there's not going to be much volume. Okay, quite a big difference. I want to make sure. Okay. Look at a couple of videos now. Bear with me to find them here. So last week was 526 on crude. Not a very exciting report. Now, we have not been trading oil live because it's been so dull. So here you got 526 and nothing. 10 seconds is our cancel rule. So right here, we would have canceled. We left the trade on, I believe, because we were just testing. And then 16 seconds, it has a normal move. But it took 16 seconds. So that was an official cancel because normally the rule is you trade the 10-second cancellation. That's the rule. That's what we base it on. Then you look at 519. That was a week after 2 canceled trades. $5.19. There's the breakout setup. Boom. Works perfectly. So 519 was a perfect breakout. Then you had 512 the week before that. Hard to believe, but another cancel. So rare. And to have three out of 6 is almost mind-boggling. It is mind-boggling. And there you have it. No trade. I forgot to turn on my strategy that day. But then when I went back, I have a test of it. And it verifies what the daily report says. It was a no-fill. Just another no-fill, May 12th. May 12th, canceled. And then if you look at May 5th, hard to believe, another cancel. Oops. So May 5th. and no trade. Canceled 10 seconds. And a gigantic drawdown, huge drawdown. And oil honestly goes the way you would expect it not to go. You expect it to go up. There's way less oil available. And then eventually, let's see, does it start to go up? I don't know if we recorded long enough to tell, but yes, it does start to go up. Not always do you get the exact result from the offset of the news. The offset meaning what's the difference between the amount that they expected and the amount that actually was there. You don't always get the move you expect. And that's true of all markets. There's so many reports written about why do stocks go up when earnings are bad, right? Happens all the time. And then 421 is an interesting report because it's not a big win. It's not a big loss. It's what we call dull. So let's take a look at 421. Get the time on. April 21st, it shorts, doesn't hit the target, tried to reach the target miraculously. I got 2 ticks out of that before it reversed. And that particular news result, there was more oil around than expected. They were expecting a drawdown of almost 3 million barrels, and it was only 500,000 drawdown. Price went down first, filled us, didn't really follow through to hit the target. Somehow I was able to grab 2 ticks. That was kind of a miracle, which sometimes happens when a market's moving so fast. As I was moving my stop, it hit it and gave me 2 ticks. And then it moved the opposite way against us. It kept going the opposite way against us. Then if you go back a little bit further, so that's 6.3. Okay, that's this week's daily market mover. If we look at previous, let me pull up an older one. And let me even get an older one than that. So let's say a month ago. So now you're in April, March and April, and you can see that oil's been not great trading. Only 3 out of 6 going into half of March and half of April. Then you have up to last week. You can see you're still just 3 of 6 and you go back to our current week, the recancellations at a 6. Let's go back even further. You go back into early March and you've got 4 out of 6. So you really are seeing an oil report that probably isn't worth trading because it doesn't have a good history. It's not making money, right? It's not making money. And it's not, when the report's not making money, you probably are doing the wise thing by letting it go. So as a breakout, oil has not been trading well, the report just hasn't been. Setup, let's check our time. Get into sync. Time is looking good. We're in sync. So if you had interest in trading oil today, I don't think it's trading well enough to risk money on it. It's just not trading well enough. Now, there's always the issue of it's been trading so poorly for so long. It's got to start trading well. But do you want to take a risk just based on random thinking? I think you're better off and smarter if you wait for it to start behaving and then you start trading it. That's the proper way to do it. Right now, it's not trading well. We went back multiple daily reports, and there is no. You're going back almost 2 months, easily 2 months, almost 3, and oil hasn't been making money. So if you're going back 3 months and you have a report that's not looking good, you probably have to not trade it live. I mean, that's just the reality of the particular report. It's not that you're necessarily, eventually, if you go 6 months with a report not working, then you really, or 3.5 months or 4, you have to start thinking of different setups, right? Now, the thing with oil is we've been trading oil in a very similar manner for years, and it will sometimes go through periods where it doesn't trade well. And when that happens, you don't trade it for a while. And then all of a sudden, I mean, we went through a period earlier in the year where the oil breakouts were working very consistently, and you trade them. But right now, oil's in a period where it's not trading well at all. Not trading well at all. So you've got to let it prove to you that it wants to trade better by its behavior. So you got a bracket of 10. You got a target of 7 and a target of 15. You got a stop of 12. Ten-second cancel. and we've seen incredibly 3 out of 6 cancels. It's mind-boggling. Now the entry time today is 10:59:58. It's usually 10:29:58. Today it's 10:59:58. $10.59.58. So bracket of 10, go over it one more time. Bracket of 10, one target for 7 ticks, one target for 15 ticks, a stop of 12. Entry time of 10:59:58. And that's our CL report. And we'll record it. And I'll check my time sync one more time. And the way we do that, go to the website time.is. Same things over and over. It gets boring, but boring is good because it means you're doing the same things over and over. Time.is. All right, so you've got, it's very fascinating. You've got, whoops. Amazingly, you've got 3 out of 6 cancels, 2 winners, and a dull. Okay, 2 winners and a dull. And one of the winners, what did we say about 428? 428. $428 really struggled to hit a target. I don't think so. 428 looked like it comes 1 tick short of stopping you out. 1 tick. And then it reverses. And it allows us to get out with a small profit. That was pretty amazing. That was a tough trade. That was 428. 1 tick short of a stop. Normally, when the market gets that close to a stop, it takes you out. It loves to take you out when it gets 1 tick away. Now, there's a lot of elements that make up this report. The most important element today is the crude oil inventories. And actually, gasoline has more meaning now that we're in the summer driving months. The actual gasoline results have more meaning. Now, we've got one more important trade this week, and it's going to make or break our week because natural gas really hurt us today. If the jobs report is a nice winner tomorrow, then we'll have a winning week. So we're going to be looking forward. We'll be here at 8 o'clock for the jobs report, US and Canada. Canada, very tradable report. $150. So we made $150 on Australia, 30 on API, 80. We're about flat on the week because of that natural gas trade. That natural gas trade hurt the week. It's all going to come down to jobs tomorrow. That will determine our week. And sometimes that's the way it goes. All right, we got 1 minute to see if oil is behaving any better than it's been. Oh, I know, Mike. Natural gas is so, it's like, I think maybe what we should do is trade one contract on natural gas because it's too painful when you have a bad one. It might make more sense. All right, here comes oil. Ten-tick bracket. I'm going to leave it even though it's big. So you have 5 million. So at least you got filled. You've got a drawdown. I don't think this trade is going to work because you don't want to get filled short when you have a big drawdown. Okay. So I'm very glad we didn't take that trade because oil's not behaving well. Not behaving well. Filled you short. Not the way you wanted to be filled because you had a large drawdown. Okay. If you look at the video, it'll show you exactly. Show you exactly what the problem is. It's just important to decide what not to trade as it is to decide what to trade. I can't stress that any more than anything. Today's oil just happily not behaving well enough to trade real money on it proved why not. Here's the trade. The report comes out. It fills you to the short side, which honestly, there was a large drawdown. So if you waited, for the failure, right, you could see it's failing and trade it to the upside, you have a possible trade there, right? There is an alternative way to trade this report. There is an alternative way to trade this report. If people want to spend 5 minutes, what I would do is download today's oil data, right? Let me show you what our software can do. So you download the data. Only takes a second if I can find it. Today is the 3rd. So you put the date on the 3rd and the oil index that we're downloading is CL721 and you click download. So oil has now downloaded for me. So now I change my connection and I go to replay, playback, okay? Playback connection. Then what I'm also going to do is I'm going to put today's date in. Today is 6/3/21. Right click, and you're going to go to the time you want to trade. Okay, and we want to trade oil today at 10:59, and let's say 50 seconds. Okay, 10 seconds before the report. Now, Ninja has a little bit of a bug with replay. Let me just see if it's going to let me. No, I have to enter the time one more time. So it takes a second. Go to, put the time in one more time. It's a bug in Ninja that they claim is not a bug, and they won't fix it. But that's life. One day we'll get them to fix it. 10:59:50. Now it'll work properly. And I'll put my strategy in, but it's a different strategy. Okay? I'm going to trade differently. I'm replaying the oil report now with a different strategy. I know it's going to work. If I press the play button, the time moves forward. Our software has the ability to do something called a squeeze play. And I don't need this clock. I'm going to use the replay clock. It has something, a trading setup called the squeeze play. I just have to find it. Instead of the trade typing a breakout, it's a squeeze play. The idea is a couple of things that you have to change. You have to make your ticks above and below the range. One tick is what we normally do. And the other thing that you're going to do is set your bar look back to 1. That's how many bars it will look back. You don't need a bracket. It's a manual entry. So I'll show you what the idea is. So when you enable a squeeze play, and you do want to choose, of course, targets and stops. So let's say we're going to choose, anytime you trade oil, you got to use at least a 15 tick stop, in my opinion, right? That's not that big for trading oil, a 15 tick stop. So let's say you use a target of 8 ticks and 16 ticks on your second target, and your stop is 15 ticks. Okay. So the setup is 1 tick above the range, 1 tick below the range. And the look back, 1 click bar look back is set to 1. Then you choose your targets, 8 and 16, and you choose your stop of 15. You don't have to worry about the time, and then make sure your trade type is a squeeze play. Apply it, okay it. Now, when you enable a squeeze play, you get all these buttons. You've got ignore the one on the left. We're not letting the market choose our direction. We're going to let the news choose our direction. If the news is positive, we're going to hopefully wait for a pullback, a move to the opposite side, and take the direction into the news of long. Today, we happen to know in advance it's cheating, but it's just practicing and showing you what I mean about this setup. So we're going to use the 2 buttons on the end, put you in the market immediately when you click them. We're not using those, okay? Those you would use for earnings possibly, or if you're trading and you want to get into the market immediately. Remember, we set up a setup where we used 1 tick above the range, 1 tick below the range, and a look back. So it's going to use 1 bar. And when it breaks the 1 tick above the bar, 1 tick below the bar, it's going to enter the trade. And we're going to use the news direction. And we would have been doing this in real time. It's tricky. So while I press play, Oil is playing now. So here's the report. The report came out. It's pulling back. It's pulling back, pulling back. So I'm going to go long here. And I'm not going to get filled until it breaks the candle and hopefully continues up and hits my target. See, there's my fill. Now I'm looking to hit a target. Will it get there is the question. Now, it's conceivable that I entered too early, okay? Because it's struggling to even get to my first target. But I'm in the direction, I was in the direction of the news, okay? I was in the direction of the news. Oil absolutely has a tendency to reverse, though. So you have to be careful. But I'll show you, you can practice these types of reports, combine my orders. I can bring them down and I can try and get out of the trade positive, which I would have. Now, a better possible entry, though. Go back, redo the time to 10:59:50, 10 seconds before the report. 10:59:50. Okay. We can turn off our setup, turn it back on. You don't have to, it's still there. Press play, and remember, we're using this clock. So you don't want to do anything until 10 o'clock. That's 11 o'clock. That's when the news came out. So you're not going to do anything. We're going to go long, one click range long or one click range short, depending on the news. Right now, we don't know the news. Now we do. The news would be out and it's long. So we're waiting for a pullback. Now you might want to wait longer than I waited. You might want to wait for a move up or a candle color. Right now you're higher up on that candle. That's where you might want to go long, okay, later than I did. But these are things you can practice that our people don't know. There's so many things that our software does that people aren't aware of. Combine the orders because it wasn't bursting the way that I wanted it to. You can shrink your stop if you don't want to take a full loss if it goes against you, right? You can shrink your stop. My orders are combined. So if it continues going up, because the news was, in theory, positive, and that's the idea of this particular setup, if it's positive, you're going to take it to that direction. And there it is. Okay, that's something to practice. It's called the squeeze play. And the idea of the squeeze play is you're using a bar to create a range, and you're breaking out of the range to enter one way or the other based on the news. So in other words, if the news is red, you would have gone in short. If the news is green, like it was today, you went in long. Okay. Now, some people might hold that for a test of the high. That green line is a test of the high, which is a possible target. And I think Mark said he didn't get there, right? Your entry was 69.03, Mark. Okay, so mine was 06. Not too far off, but it did not get to the high of the day. But you could have gotten a first target of 7, 8 ticks, somewhere in there. 5 to 8 ticks. So just a very interesting method and way that our software can trade, but you must practice that. That's not something you can do in one day, one report. You want to practice a whole bunch of reports where you don't know what the result is, because when you know what the result is, that sort of makes it easy to know what direction and how it's going to move. So you want to practice on reports you don't know what's happening. You don't remember what happened on that particular report. So Mark, what did I do? What could I have done better? Because this is the way Mark trades the oil report. How do you decide on your entry? That's the trickiest part of this particular trade. In other words, the news comes out, right? How do you decide where to enter? So if I put my time back on 10:59, 50, I've got 10 seconds for the news to come out. And I have to re-put the strategy on because I took it off. So the key is one tick above the range, one tick below the range. The one click look back is 1 bar. And let's say you have, I think my targets were a little too big. So if you use targets of 6 and 15, the stop can still be 15. And your setup is the squeeze play. So the tricky part is always, not always, but often, the entry. So at 11 o'clock, the news is going to come out. Okay. And then we're going to look for the result. Okay. So the difference between the way that I did it and Mark did it, the news comes out, he hits the button, and then he brings his order down. Okay. And I would have gotten filled better. Okay. He brings the order down because he saw the news was good. That gives him a better fill. See how it's a way better fill than I got. That's the missing piece. He sees the news is green, hits the button. Let me show you again because it's critical to the way that it should be traded. Now I totally understand it. So I'm going to go back to the time 10 because the oil report, the way it's been behaving, it's not working as a breakout. This is potentially a temporary way to trade it until the breakout starts working again. So 10:59:50, you got 10 seconds. Let's make sure the time is still working. It is. All right. So when he sees the news come out, 10 o'clock, he hits his button. So in theory, my button would be high and I'd bring it down for that long. And maybe he'd even bring it down further, but I'd say I'd leave it where it is. I'm going to hit my first target for sure. And then ideally, you're going to bring your stop to break even now and look for a runner all the way up at the high of the day. That's the ideal. That would be the ideal. And of course, you have to do it in real time. I agree totally. Because you don't know. We know what's happening. When you know what's happening, it's just practicing your technique. That's all it is practicing the technique. So you download some reports, replay. That's the importance of replay. And you practice on reports where you don't know the result. And that's how you can get good at a technique. Okay. All right, folks. Tomorrow, 8 o'clock, the week will be a winning week or a losing week depending on the jobs report. It's that simple because we're pretty close to flat right now because of natural gas. Pretty close to flat. Natural gas hurt us today, and it's a part of life. We have to live with it. Maybe we'll just trade one contract on natural gas to just keep our risk down on it. And I'll see everybody tomorrow at 8 o'clock for the trade of the week, really. Trade of the week, possibly. Okay, folks, any questions? I don't see any, so I'll see everybody. See everybody tomorrow at 8 for our final family money trade of the week. Take care, everyone.